Hello, everyone, and welcome to Gold Off the Charts. A little deep dive analysis every day is the secret to making giant strides on your journey to financial freedom. In today's video, I want to talk about a very interesting phenomenon, one that might actually flip your perspective on its head. If I asked you, what are the two hottest sectors in the market right now? I'm sure most of you would say, first, AI, and second, gold and precious metals. In traditional investing, these two sectors are usually seen as being worlds apart. AI represents the high-tech future, high risk tolerance, and an explosion in human productivity. And gold? It represents the weight of history. It's about playing defense, hedging against risk, and a lack of trust in paper money. Normally when money is chasing AI, people dump gold, or when everyone runs to gold for safety, tech stocks usually take a hit. However, at the start of 2026, the market gave us a huge surprise. Both are actually soaring at the same time. What's really going on here? Is it just big money having a party, or has the basic logic of the market changed? Today, I'm going to break down the deep reasoning behind this shift. I'll connect several events from the past few days that might seem unrelated, but actually reveal a brand new golden era forming, one we've never seen before. First, let's look at the US stock market. Have you noticed the vibe has changed lately? Even though the AI hype is still going strong, the big money is moving. It's spreading out from just simple graphics chips, or GPUs. Where's it going? It's flowing into data storage and metals. Recent data shows the storage sector in US stocks is being completely revalued. The logic is solid. AI needs more than just a smart brain to process info. It needs a massive memory to store all that data. The hottest tech right now is called HBM, or high bandwidth memory. Think of it like a Ferrari with a tiny fuel line. If the fuel line is too thin, it doesn't matter how great the engine is, it can't run fast. Right now, HBM production is struggling to keep up. Giants like Micron Technology are seeing their stocks soar because investors realize the bottleneck for AI isn't just chip design, it's whether we can produce enough storage parts. But that's not even the part that excites me most. What really gets me is the market's frenzy for metals. If you look closely, you'll see traditional industrial stocks like Alcoa and various copper mining companies. Their recent stock performance is a classic case of old dogs learning new tricks. Why? Because Wall Street's smart money has done the math. Where does AI end? With computing power. And where does computing power end? With electricity. And what do you need to move and store electricity? You need copper and aluminum. So we're seeing a spectacular sight. The tech boom is directly triggering a massive bull market in commodities. This isn't just a fantasy story anymore, it's a real industrial requirement. This is a huge signal to remember, and I'll explain how this decisively impacts gold in a moment. Next, let's talk about a major event from last night, a truly historic moment. Jensen Huang, the godfather of AI, gave a keynote speech at the CES Expo. If last year's speech added fuel to the AI fire, last night's speech was like pouring a whole barrel of gasoline on it. Jensen was in his signature leather jacket, but what he said pushed AI to a whole new level. He introduced a core concept called physical AI. What does that mean? Up until now, the AI we've seen like ChatGPT or image generators lives on a screen in a virtual world, but Jensen told us the next stage of AI is robotics. What did he show on stage? Humanoid robots that can carry things and understand the physical rules of our world. He proposed a mind-blowing three-computer theory. He said for a robot to move, it needs 3 brains. The first is in the cloud for training and learning. The second is for simulation, creating a digital twin of Earth where the robot can fail 10,000 times without getting hurt. And the third is the actual computer inside the robot that follows the orders. What does this mean? It means AI is moving from software to hardware. It's no longer just about code and pictures. It's about entering factories, homes, and shipping centers. It's turning into steel, robotic arms, and real-world tools. He mentioned that NVIDIA has launched the Cosmos platform, a world model built specifically for physical AI. This shows that AI's hunger for computing power, hardware, and energy hasn't peaked, it's actually just about to explode. This speech set the market's imagination on fire regarding the age of robots. But you might ask, you've been talking about robots for ages, what does this have to do with gold? It has everything to do with it! This is the knowledge gap that most people haven't caught on to yet. Let's connect the dots. First, the AI boom is causing a scramble for metal resources. Second, Jensen's speech confirmed that AI is moving into a physical phase, which means long-term, massive resource consumption. when you combine these 2 points, what does it mean for gold? It means the fundamental reason people hold gold has undergone a massive change. Why have we bought gold for the last few decades? Usually to hide from risk. If there's a war, buy gold. If the economy crashes, buy gold. If inflation gets crazy, buy gold. Because of this, gold usually feels pessimistic. The worse the world is, the better gold does. But the narrative for this 2026 bull market is totally different. We are seeing precious metals, gold, silver, even copper and aluminum all getting stronger together. This is very rare in market history. Why? Because the AI narrative has injected industrial lifeblood into the precious metals market. Think about it. Hundreds of millions of robots and massive data centers need high-quality conductors. Gold and silver are irreplaceable in high-end manufacturing because they are the best at conducting electricity and don't corrode. This new industrial use doesn't take away from gold's status as safe haven money, it adds a whole new growth story on top of it. This is huge. Gold is now dual-powered. On one hand, countries are moving away from the dollar and central banks are buying gold for safety, that's the defensive floor. On the other hand, the AI revolution is driving up the price of all physical resources, that's the aggressive ceiling. This proves one fact. This rise in precious metals is driven by real global demand, not just hype, retail gambling, or short-term trading. When copper prices rise because AI needs power, and silver is in short supply for electronics, gold, the king of metals, will naturally see its value floor rise too. In an era where resources are king, you can't have copper prices skyrocketing while gold stays flat. The whole price scale is being reset. This makes the trend for precious metals much more certain. We might be entering a commodity supercycle like the one driven by China's growth in the early 2000s, but this time, the driver is AI. So, given this logic, how should we look at gold in 2026? My main conclusion is that gold is a top-tier asset even without a global crisis. In the past, we were always waiting for rate cuts, waiting for a recession, or waiting for a war. It felt like gold only made money when things went wrong. But now, I can tell you that even if the world is peaceful and the economy is booming thanks to AI, gold still has plenty of room to run. Why? Because in the AI era, computing power is strength, energy is the real currency, and resources are the foundation of it all. Gold, as the ultimate scarce resource, will only become more valuable. Of course, we have to stay grounded. In 2026, gold will still benefit from side events like small geopolitical tensions, or shifts in inflation data which could spark new price jumps. It won't go up every single day, there will be pullbacks and shaky periods. However, there's a key detail for investors. With this dual power reasoning, whenever gold dips, even for technical reasons, the market will see support buying. What does that mean? It means it just won't stay down. As soon as it drops a bit, long-term investors jump in to buy. Why? Because the world realizes the AI resource boom is a 10-year trend, not a 2-day fad. No one wants to give up their gold easily. Plus, we have to remember the big picture. The value of global paper money is still dropping. US debt is still ballooning, and Europe's economy is struggling. It's like a giant ship with a leak, and AI is a powerful new engine being bolted onto it. The engine can make the boat go faster, but it doesn't fix the leak in the hull. On this ship, gold is the most reliable life jacket, and now that life jacket is covered in AI diamonds. Does that sound like a bad deal? So, to wrap up, we see the AI boom spreading to storage and metals. Jensen Huang's speech signaled the start of the physical AI era. And all of this has created a rock-solid foundation for gold and precious metals. This isn't just about safety anymore. It's about controlling future resources. Under this new story, the logic for gold going up is stronger than ever. It doesn't even need to follow the US dollar anymore. It's carving its own path. What does this mean for regular investors? It means you don't have to stress about the Fed's next move or pray for global chaos. You just need to recognize this big trend and stay calm during the dips. In 2026 and beyond, gold is a key ticket to protecting your wealth for the future. I hope this gives you a clearer view of the market logic right now. We are in a time of massive change, and AI is rewriting the rules for everything, including how we value traditional assets. Don't use an old map to find a new world. Learn to adapt and update your investment strategy. One final reminder, all of this is my personal observation based on current news and logic. I'm just trying to help you clear the fog and see the truth. This is not direct financial advice. The market involves risk, and trading requires caution. Everyone's situation is different, so make sure you make your own independent choices. Investing is a journey. Use other people's views as a reference, but trust your own judgment. That's all for today. If you found this helpful or it cleared up some confusion for you, please leave a comment and let me know. Don't forget to like, subscribe to Gold Off the Charts, and share this with your friends. I'll see you in the next one.